Our next segment is going to be a little bit different from anything you've seen at an investment conference. Are you ready for the one takeaway challenge? Do you know what it is? No? Okay. But you're ready anyway. This is going to be super fun. What's going to happen is we will be introducing our 5 distinguished experts one by one to share their most crucial stance for 2024. They each have 1 minute. 1 minute only, 1 minute exactly. And then it's up to you to vote to decide which one is the most memorable. So fair warning. Let's start by welcoming William Vettorato, Managing Director of EQT. William.
Well, good afternoon. 30 years ago, a prominent industrial dynasty, the Wallenberg family, decided to venture private equity. Back then, PE was all about financial engineering. But the Wallenberg family, when founded EQT, decided to hold true to their industrial heritage, establishing what we call today value creation at the core of their investment philosophy. Great performance brought us to fantastic returns, and they made us become a third largest globally PE fund in the world by fundraised. This is done with value creation at the core of what we do and with a locals approach. Today, we are in the market with EQT Nexus, a fund that for the first time makes an investment content so far reserved to large institutional clients available to a wider set of investors, private investors, family offices, and small institutional clients. Thank you.
Wow, William, under the deadline. Very well done. Thank you, William Vettorato from EQT. Next up, we have Kylie Chan, Head of Wholesale and Retail Sales Hong Kong from Natixis Investment Managers. Welcome, Kylie.
I'm getting nervous. Good afternoon, everyone. I would like to start by talking a little bit on value investing. So value investing, from our point of view, is looking for companies with good potential, but at the same time, at a discount. So it's like looking for buried treasures. Is a tough job, but it could be very rewarding. And that's one of the reasons why it's still one of the most successful and one of the most popular investment strategies in the world. And if you look at the chart on the left, now it's actually very interesting timing, because when you look at the performance gap between the value stocks and growth stocks, you can see that value stocks have been suppressed for so long. And of course, we are here to help. So at Harris, Harris has been doing value investing for 48 years. And if you look at the portfolio, it's very interesting as well because of the lower valuation compared to benchmark, as well as the higher profitability. And track record has been outstanding as well. Thank you.
Okay, I got to thank you, Kylie. You made it. Maybe 1 second over. Well done. All right, next up we have Henry Chui, Head of APAC Private Wealth at Partners Group. Please welcome Henry.
Okay, there's one fundamental flaw with private markets, even though they're great. And that is, it takes you a long time to invest your money and even longer to get your money back in the state of returns, as shown on this chart here. But an evergreen fund actually solves all these issues. So you have no J-curve, your money is fully invested on day one, and you're diversified across sectors, regions, and vintages. So you essentially have companies that are at the beginning, middle, and end of the value creation cycle. And of course, you have regular liquidity as well, on a monthly and quarterly basis usually. So what that means is, because your money is invested fully on day one, a 10% total return is actually equal to a 22% IRR. So the takeaway is, don't confuse IRRs with total returns. Thank you.
Thank you, Henry. Well done. 5 seconds under. Coming up next, we have Naveen Gulati, Head of Global Wealth Management Business from PIMCO. Please welcome Naveen.
All right, great. Well, one takeaway today is why you should finally move cash off the sidelines into high-quality bonds. So there's 3 reasons. First, macro. We were in a macro environment where inflation was trending up, caused the Fed to increase rates, and that's when cash outperforms bonds. Now we're in an environment where inflation is coming down, and that allows the Fed to lower rates, and that's when bonds outperform cash. Second, the current yield on a high-quality bond portfolio that PIMCO offers is 7%. That is a 94% correlation with what you will earn over the next 5 years on average. And so 7%, 5 years, 35% over the next 5 years. Cash, on the other hand, has to be reinvested every time your fixed deposit comes to maturity. So as the Fed lowers rates, that means you reinvest at a lower rate, and then you don't get nearly 35%. That's it. Thank you.
Good job. Well done, Naveen. You're under time. Thank you so much. So last but not least, we have Kristy Wong, Senior Vice President, Intermediary Distribution of Greater China from Pinebridge. Please give Kristy a welcome.
Thank you. Thanks for having us. So my name is Kristy from Pinebridge. Allow me to start the session by posing you a question. Are you looking to strengthen your portfolio with stability, attractive yield, and diversification? I assume the answer is yes. So please consider Pinebridge Asia Pacific Investment Grade Bond. And here's why. First, investing with quality. Our fund invests in pure investment grade bond within the Asia Pacific region. Our average credit rating is typically A2 or A3. Second, lock in attractive yields with diversification benefits. So Asia US dollar investment grade bond offers very attractive yield of over 5%, and at the same time has very good risk-adjusted return compared to its US or global counterparts. Finally, yet importantly, the fund is managed by a highly regarded investment team with decades of experience and outperform consistently. Thank you.
Nice job. Thank you so much, Kristy. Okay, thank you so much to all our participants.